Presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil CHapman.
Tiger Technicians Hour. Just had a quick question moments before the bell rang, and I just wanted to cover that. There it is. I'm doing the NASDAQ futures. This is the E-mini. Let me just expand that a little bit. That's an A, that's a B, that's a C. And that's a D. We're in leg D in a brand new buy mode. Stochastic is very poor. NASDAQ, the MACD is very poor. The price is holding. That means that the next rally in the technicals has to push the price up considerably to break out. Otherwise, when it pulls back again, it'll start to break towards and it's really a rectangle formation. I'll talk about that in a moment. But the most important thing is leg B. This is unbelievable. Leg B in the NASDAQ futures. This is the September futures trading at 3,078.50. It is leg B in the daily chart, and that corresponds to the QQQ Trust Series in leg B with a doji candle today. Stochastics at 98%. The MACD is very strong. Starting point. Starting point in the NQU13. Yeah, let me look at it. Let me show you what I've got. Starting point goes all the way back. Starting point. Oh my goodness. Sorry. I'm just going to have to squeeze this closed. I don't know if I can do that right now. I'll squeeze it and you'll be able to see it and you'll be able to compare yours with mine. The real starting point, of course, is the low of the 24th of June at 28.1775. 28.1775. 28.17.75. I go to ABCDE. F, it recycles actually and goes to a brand new E, pulls back, and that E becomes the top on the 1st of July at the close at 2 o'clock, that is, in the afternoon. It pulls back, starts a brand new one, it goes to ABCD. E pulls back, starts a brand new buy mode, it goes to ABC, oops, it recycles to D. I'll see if I can make that a little clearer. There were a couple of recycles which were tough to do, but as long as you're looking at the technicals and you're looking at the Chapman wave with potential instant restarts, that's the most important thing that you've got to keep in mind. If you can identify those restarts, you have the alternate count, and all you have to do is watch that closely. Now we've got an ABCD, exactly the same thing formulated there, goes to another D, and now started a brand new ABCD. So we've got basically, except for one E, we've got 5 peak Ds. The cash index. Oh man, this is a fussy question that we've got there. Where do I start? SPX. All right, I'm going to try to get, you know what? I'll do that during the break. I'll write it down during the break. See, I've already forgotten what I wanted to start off with today. SPX 120-minute at break. I'll do it at the break, and then we'll be set to go. Okay, now I haven't updated this one. So this is very interesting because the S&P cash has gone to 1684.51 on the 15th of July. Pulls back for peak C. And all it had to do was to go to 1684.52. 1684.52 to start leg D. What did we do today? We went to 1684.75. So now this is going to be the real issue. I'm going to get a little complex here. Usually it's Friday that I talk Chapman wave in a kind of detailed discussion, the kind of discussion that is what I would be talking about in one of my Master Trader series or one of my webinars. But most importantly, I need to discuss it now because there's another technique that I developed over the years. You know, so many of these proprietary techniques are proprietary. I talk about them openly in certain conditions, under certain conditions, but they are developments that I personally have come across and had to experience taught me that certain things that occur over and over and over again. I'm talking about, when I say over and over, I'm talking about 75%. I usually like to think even 80 or 85%, but a lot of the time it successfully works. And one of the things that I talk about very often in my Master Trader series, I do talk about it here, and I show it to my subscribers as I do all my different techniques. This one here is the Chapman Wave Squash with a stochastic. One of the reasons why years ago I put the stochastic underneath the MACD. Folks, this is July the 17th, Wednesday. And I will get to the numbers in a moment. But I'm going to do things slowly here because it is so important where we are, why I've remained long, why at the same time I've made a big fuss about the terrible action in gold. I'm only talking about in relation to what we would call an oversold condition. And I'm going to emphasize this again and again and again. In the slow stochastic, the terminology used in traditional analysis in every book is that when the stochastic is trading, and I use the slow-moving average, not the fast-moving average, the slow-moving average, when it goes above 80%, think of one word, bullish. When it is under 20%, think of one word, bearish. Don't think overbought above 80% because that's negative connotations. I don't know how they came up with that term because your preference is to stay over 80% in the so-called overbought territory as long as possible. Oh, that's so wrong. Your preference is to see the price moving with the slow stochastic over 80% as long as you can. And well, as long as the price holds, it's really positive. It is bullish, bullish, bullish. Don't think of it as starting a bearish move. Yes, it does at some point. Obviously, if it becomes overbought, it's going to become oversold at some point. It's going to turn around and go to the other side. But that's wrong thinking. It is just wrong thinking. Same thing on the downside, under 20%. So let me just do that. And that's got nothing to do with people's techniques or anything like that. I'm talking about the thinking. That's all. And here we are. Stochastics at 97%. Is that overbought? No, it's fantastic because it hasn't even turned down yet. Don't even get to the overbought area. It is fantastic. It is overbought when you get to leg D and the stochastic starts to diverge and go negative as the MACD is struggling to hold positive. At this particular point, all systems are really positive. Hey, by the end of the day, you could be down 400 points, and that'll change things. But at this right now, there's nothing wrong with this chart. It is flattening out. It is not making the reversal, say, as it did right here, when it made peak C back in the 9th of May on the S&P, and the stochastic started to turn down and kept going down with a negative divergence, even though the price went higher. Why? Because the fast-moving average is the one of the MACD, follows the price. Keep these things in mind. They are so, so, so important. All right, let me just do this. We're in leg D in the S&P. We're not yet, I don't believe, we're not in leg D of the Dow, because the Dow has to get above 15,509.48. 15,504.98. I think that's what I said. What is it? I just said the thing. Why would it just go right out of my mind? 15,009.48. Oh, I knew that. I wrote it in the other day. Number of times. 509. 48. Okay, the Dow is up 20 at 15,471.91. It needs to go to 15,509.49 for leg D. You've got, let me just go through these one at a time. You've got the composite index at 36.09, up 11. Oh, no. It's the Qs. Look at the Qs. The Qs are in leg B with a potential doji candle today. Stochastics at 98%, and the MACD is still very strong. That's the daily. The weekly in both charts, the MACD and stochastic in the weekly charts of the Dow and the S&P, and even the Qs, that's the sandwich. Remember what I keep talking about? When there's a sharp pullback, as there was in the Qs from 74.95 to 69.84, it impacted the weekly chart very negatively. It held the support line beautifully, and then made the Chapman Wave falling ants breakout. But in fact, it's the monthly chart that is so powerful still, in leg E up. So that's what we want to do. So let's go on. Now we've got gold. Now gold, it's down 8.90 at 12.81.60. I have to tell you, for something that has been beaten down and beaten down and beaten down and beaten down, this is pathetic action. It is so pathetic. That's not to say that some of the gold stocks aren't acting very nicely off the bottom. I'm just saying gold itself, that pattern, it has to break through. It has to just say, I'm out of that. This is the cork in water theory. You've pushed the cork down, you let go, and it pops right up to the surface. That's what you want. We'll get there in a minute. Here we go. The GC. The GCQ13 is trading right now. Oh, man. It's at 1, 2, 3, 4 sessions. Of course, the day's young. 4 sessions, and it's barely got out of its own way. Now, there is a potential squash in the stochastic and the MACD where they come close together. Remember, this is a technique I was talking about before? That's the reason why I put the slow stochastic underneath the MACD. It's only for that one reason. Although over the years, I found that if I think clearly about it, the stochastic is the torque. That is the kickoff, the first gear, and then second gear, maybe even the third gear, peak C, especially when you get the squash. But it is the fast-moving average of the MACD and the beta, the distance, the width of the green line, fast-moving average right there, above the red line. And that's going to be important. Now, before I forget, Samantha, you sent me an email the other day, actually about 2 weeks ago after I spoke at the Boston Investors Group, and there were questions you had. I answered you. I'm not sure the email actually went through. I did it again, and I haven't heard back. So I'm a little concerned that since there were specific questions implying that you wanted an answer fairly quickly, I did take the time to give you the answer, and I haven't heard back from you. So if you're listening, hey, just send me an email again, and I want to make sure that I got the right return address, number one. Number two is Boston Globe yesterday, the calendar section, the G section, Hot Wheels. Some of you might remember 4 to maybe 5 years ago when my son and daughter-in-law were having children, I discussed those carriages. I spoke about having especially gone to Sears. I wasn't getting my toolbox, my Sears Roebuck toolbox. I was getting a stroller. And for me, between $25 and $28, that's what I was going to go and get. That's when my kids were born. That's what I went out to do. I went out to get a stroller, and I wasn't prepared to spend too much money. Why? Because it was just a simple way of carrying the kid. I wanted it to fold up in a snap, be as convenient as possible, snap it in the car, and we'd go everywhere, which is exactly what we did. No problems. But I then came across these carriages, the McLarens and all that. They had racing stripes. I'll talk about that when I get back. These are the carriages for little children that can cost $1,800. Same 4 wheels. I'll be back straight off this message.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil CHapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil CHapman. So before I continue rating against excessivity, I had a question then about VWO, which is Yo wanted to know about this, the Vanguard FTSE Emerging Markets Index. Well, it's fascinating because I've been looking at this very closely. I spent some time last night on EEM, which is the same thing. EEM is the iShares and Emerging Market ETF. We used to look at this constantly years ago, and then I just found that I was just taking too much time on stuff that there were other things that I wanted to look at in greater detail. So the daily, this is almost the same as a gold chart coming off the bottom. You've got A to B to C, leg A, leg B, leg C right now. It's been smashed to the downside. This, in fact, is a very nice move up with the stochastic at 93% and the MACD still very good. I now have to change the plus sign to an up arrow. That's the way it works in the Chapman wave. And we've got a very nice move, but I have to, at least for now, consider it a counter trend move. I know a lot of people who say, oh, this is the time to go to the emerging markets. That's their turn. They might be right, but I can just say that the MACD stochastic in the weekly chart says to me, yeah, I think there's a bit of work that has to be done testing in the EEM. I'm using the EEM as the root now. Much more in that 38.5. It's a 39.77, up 27 cents today, the EEM. M for mother, and I think it needs to test more the 38.5, maybe 38 area. Take a little time, and then if it powers to above 40.20, then all of a sudden 40.87, the 200-period exponential moving average becomes important. In the monthly chart, the symmetric triangle broke to the downside from the apex at peak B. Now all it's doing, you see this particular chart. Let me show you something. And once again, I prefer not to use one of the stocks that we have in the opening call, especially if it's working, because it's that hubris, it's that trading guard that's just sitting there saying, you show off and I'm gonna smack you on the side of the head. But this is not. I have to show chart patterns. I will show this. We are short this particular stock. ACT is Activist Inc., Integrated Specialty Pharma, just been an unbelievable winter, going from the low 19 area, I think it was 19, 20.19 back in November of 2008, walked the 9-period exponential moving average, still way above the moving average. It's trading at 121.95 right now, down 89 cents, and it made a high at peak G/C, and I haven't any indication yet to say that it should be a G. It could still be a C at 133, round number high. I wrote it in there. I forgot to write it in here because the month is not finished. Round number high. I suspect that's going to be a high for at least a little while. So we've been short for a short while because of the same pattern. You remember the pattern repeats, patterns repeat. So there it is. There's that H pattern. Do you remember gold? I can go to the @GC continuous contract because I've updated that now. I have to type it in. Look, the @GC continuous contract had the same thing. It made that top, and then it made an arch formation and a second arch formation and then broke down. So I'm looking at this and I'm saying patterns repeat. So I think that the EM is acting well right now. The weekly chart says, yep, and then it's going to have a bit of a pullback, and it's after that pullback that you will see something, you have to see something very important so that the EM will then suddenly take off and go right into the 41.43 area, which is the 200-period exponential moving average on a daily basis, and then 40.87 is just below that on the weekly chart. That's going to be the fulcrum area. Does it get repelled or does it get propelled through it? So that's what I wanted to say about that. So if you're in it, stay long. Let it take you out. In the meantime, it's avoided the H to an M pattern, making either a larger H pattern. There's two fighting patterns going on right now. One is the up channel, and that up channel is right there. And there's an inside track up channel right there. So, yeah, it's the way the EM handles that whole area of between 40.16 to 40.57, and it's rising, so each day it will be slightly higher. Hope that helped you. Now, let's go. Again, I guess the question is, could it be shorted if it gets to that area? I would have to say that that would be the area, getting close to the 40.50s. Then the area with the buy stop would be at 40.87 to 41.43. I would prefer to have patience and see what happens if it gets to peak D, which it should get to. If it fails and goes under 38.91 before that, that is terrible action. And as I say, this chart looks just the same. Let me give you, look at this, GG. It's the same in miniature. Let me go to the GLD. You'll see it's the same chart. Yeah, there you are. GLD, very similar chart. Leg C up. All right, I'll be back. Basil CHapman, 877-927-6648. And then I'll talk about carriages for babies.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil CHapman. Let's just finish those numbers. So the bonds are up 18. So that makes, see, this looks the same as one of the gold. It looks like the gold here. They're all coming off the bottom, but it's kind of a pathetic move so far. You've got to find the weekly chart of the TLT is, it made the left side, right side price time match, but you've got to get back into, the 100. It's at 108.93. It's got to get back into the 111 area, and very quickly. That's what I'm watching. How does the TLT, how do the flat stochastic, remember the stochastic up, I said it's really positive if it's holding a flat lining up in the 86 to 90% area. Well, this is the exact opposite. It's flat lining in the 7% area. That's not oversold. That is negative. It's not showing oversold is when it bounces and breaks back up, as it did, the TLT, when it had that nice rally back in the middle of March. That was good, but this is just it's okay. I need to see more. That's all I'm saying. 200 period moving average at 110ish, 110, I think 30. I want to see it break above that, break above the 9 period exponential moving, and start to hold. If bonds are going to have the balance and everything about, I haven't got the chart right now. I said I also look at the S&P. I'll have to do it sometime soon. I'll get to that 120-minute chart. I forgot about it. So I just wanted to get to bonds, and I'm just about to say right now that yield it's stuck in a range. That's what I'm looking at right now. We've made peak B in the weekly chart of the TNX, I believe it is. That's the 30-year T-bond yield. So we're going to be following that closely. Most importantly, you've got the dollar. Now, this is really important because the correlation between the dollar and the counterpoint, like Bach has counterpoint where one melody is going one way, the other melody is going the other way, then they come together and they go apart, almost like this is what the counterpoint. This beautiful counterpoint. Look at this. I'm showing you what my subscribers see every day. This is counterpoint, and you can use it to your advantage. You see the way that the 120-minute Dow chart has gone to peak D and rolled over, a little bounce over here. Look at the way the VIX has made a cup formation and is pulling back. The way they handle this particular move right now is going to be very, very important. Look at the Qs. Look at the DIA and the DOG. I didn't finish noting. That's A, that's B, C, D. So you've gone to the upside here in the DOG. That's the ProShares Trust Short Dow 30. And now you're sort of flattening out. On the diamonds, DIA, you've got the flattening out. Try to use as much technical information that you can use without much fuss. I mean, I'm just looking at the picture and I'm saying, okay, getting a little tired on the upside, getting a little bit tired of running down in the volatility index. A sharp move from 1350 to yesterday's high of 1438, was it? Let me just check here, 1456. And now it's pulling back to 1408. And I said underneath 1420 will be a prop for the market not to pull back much more. So I wanted to go through that. Now, the other thing is I need to go back to this. Consumer Reports top-rated in-step safari strollers. And I remember when my little grandchildren were born, they're 4 and 5 now, but I remember being at that fancy place in Brooklyn, I think it was in Williamsburg, a store that had all these baby carriages. They don't call them carriages anymore. They got all these strollers and they got all these different names and everything. And there was this McLaren. I thought, McLaren, is this the guy that does the speedway tune-ups for the Ford McLaren or something? What are we paying here? And it was an extremely high price for the most simple carriages. I kept saying to my wife, $25? No, it was 27. I'm sorry, $27 we paid for our little stroller. And it was great. I mean, it did everything. You just folded it up. No, it didn't do everything. It did everything we needed. It got the kid nicely from one place to the other. Very easy to maneuver. You didn't have to negotiate with 3 people. You just kept walking. And you folded it up like an umbrella and you put it into the car. So here, Consumer Reports says, top-rated in-step safari strollers, about $150 each. These are top-rated, right? You can find strollers now. There's a Bugaboo Chameleon, British Royal light blue Bugaboo Chameleon, which the Catherine, the Duchess of Cambridge, is reportedly she's bought for her soon-to-debut British Royal, 1,800. What does it do? It takes the baby from point A to point B or even point C. But of course, what does it have? It has everything. I wouldn't be surprised if it has a Sony game, whatever it is. I mean, they have everything. I even read one here that it has the origami, is that it? A power stroller that not only folds and unfolds itself, but allows the user to charge a cell phone and check speed and mileage on the LCD dashboard. It comes with daytime running lights, a 4-cup holder, and its own elaborately produced YouTube video. So, anyone sat in a Tesla with that beautiful screen? This is an age of excessivity. There's just absolutely no question about it. So, let's get back to the market. We're not going to be able to do anything about that. And my only point here is the sheep aspect. People have to have it because others have it. That is the point. And when it becomes so exorbitant that the price is really not the object because it's the having, that's the period of excessivity I'm really watching really closely. So, I'm going to do this. I'm going to show you the dollar, and I'm going to show that it's trying to form a base based on the 120-minute. And it had a huge spike. Bernanke must have said, boo. And the dollar went up and down and up and down. And that bar is correlating to the GC Q113. I'm quite sure Larry's going to get into this in the show after me. Larry Presventer comes on. He's got these fabulous ways of looking at the different charts with these Gartleys and these butterflies. So I'm just going to deal with this to say I believe that gold right now is set up the trading range. The trading range is between 1,300 and 1,276. At some point, it's going to break to the upside. The moment it breaks to either the upside or the downside, that's the 200-period moving average at 1276. If it closes under that, that's going to say the dollar still has internal strength. And until the dollar's internal strength is relinquished, gold is going to have a tough time spiraling to the upside. I said a week ago that the gold, that pattern that I'm looking at, is that gold has to have a 18 to 22 point spiral to the upside, and it should have it 2 days in a row. If it does that, I would say case closed. This is at least a 6 to an 8 week rally in gold, and it's a rally that could take it all the way to the 1464 level. Should be a layup to get there, but it should get to 1520 with even the possibility of touching 1457, which is the 9-period exponential moving average. In the 1457 is the 9-period exponential moving average in the monthly chart, and that's the one that should in fact be challenged if there's that kind of power in this particular move. And at this particular point, I just see a rally of very oversold conditions, and I've not yet got that trigger, that trigger that makes the V-shaped bottom, which is the bottom I really like to see when I'm looking at any kind of move off a potential significant low. But I do have to, at 86% in the stochastic, I do have to put an up arrow in that says it should go to at least a D. That means that in the next day or two, that's going to be the opportunity for gold to suddenly have that big gap up in the morning, not allowing anybody to come into the golds who have not already gotten in, and then they're going to have to chase. That's what you want to see. Now, some of the stocks, as I say, have acted very well. Enough with that. What I want you to do is to go to the volatility index, VIX.X. Look at that 9-period. First of all, look at that peak that was made at 2191, and it's the Eiffel Tower pattern that goes straight up and it's straight down, but it's held support right in the area of 1350 and 1356 was the low of the 28th of May. That area is going to be very important. The weekly chart, now this is going to be very interesting. I think you can see it. Yes, you can. Look, if you're following this, I'm just going to get rid of these lines because they're useless. They haven't proved anything. If you're looking at a resistance zone, and one of the things I said the other day when it was really starting to look ugly was that until I see weekly closes, probably 2 weekly closes in the 20s, and that's in the 20 to 22, 23, 24 area in the volatility index, I have to consider that it's got that same spiral to the upside effort that then fails, and you've got a whole period of the price moving underneath the 9-period moving average, which is at 15.04, and the VIX right now, the volatility index is at 14.08. That should in fact be a positive. Now, I was asked, all right, so what's your stance? My stance is very simply that as long as the volatility index is in the teens, there's buying pressure. When it goes to the 19-ish area, starts to head towards 20, you're going to start to see this market pull back. Pullback is different to sell signal to sell mode. The sell mode will be coming in, and it'll happen at some point when the volatility index gets into the mid-20s. You will see this market have a good 800 to 1,000 point pullback in the Dow if it holds in that area, and something like and the S&P would have about 100-point move, 80 to 100-point move to the downside. Meantime, we've got to look at XLF, which is the that is the S&P Select Financials. Now, I like this action. In fact, I might have to renotate, and I'm going to call this now because of that G/C in the weekly chart. So as long as you rotate, you remember the aspect of the market that is so important is the rotational aspect. can you constantly see, even within a sector, one of the banks or two or three of the bank stocks act kind of poorly while one or two act superb? Yes, you can. And that's what we've been seeing. That's what's kept the XLF in the upward trajectory. And as far as I can see, you've got, look, BAC, up in the den. Who's there? Z in the den is looking and he's saying, yeah, new recovery highs. A, B, C, leg D. Leg D in the daily chart, a probable leg E in the weekly chart for Bank of America trading at 14.22, up 22 cents, and leg D in the monthly. Wow, that's very nice. And the MACD and stochastic are still very strong. Look at Wells Fargo, WFC, there we are. I showed it the other day. I wanted to buy calls on this thing. I just didn't implement it. It was a great plan. I just didn't do it. So it's in leg D up in the daily. Leg C up in the weekly. Same as the different chart pattern, but the same letter as the Bank of America chart, and it's testing the 44.52 high of September of 2008. Right now it's at 43.88. The high this month so far is 43.88. So that's going to be today's the high. That's very interesting. And you've got JP Morgan, JPM. There we go. JP Morgan has made peak D, consolidating that in the weekly chart. It needs to go above 55.90. It almost went there the other day. It went to 55.87. Needs 4 more cents above that to actually start another leg to the upside. If it happens this week, it'll be a leg E and a leg D in the weekly charts. You can see I am heading in my work towards monthly charts that say start watching very closely how you make peak Ds, E's, and maybe F's in this period between now and probably Wednesday or Tuesday of next week, probably Wednesday or Thursday even of next week. And that's when I'm anticipating I'm going to get something like a sell signal. And if that sell signal goes to a sell mode, we're going to be looking at something that says, aha, now we can have a pullback of consequences. I don't say it's going to have to happen because I need to get to that point, but only until we get to that point am I able to say, aha. And right now I'm not saying aha, I'm saying let's just look at a couple of other stocks that are very, very important. One of them being I didn't mean to do that. No, I want you to look at the group. I thought I'd look at our Dow Quartet. Now, remember, in my opening call, we could, in fact, be long any one of these things. But I just wanted to show the Dow Quartet. You've got GE not acting very well. It made a very quick ABCD at 24 round number high. Pull back, it's hugging the 9-period moving average. Weekly chart looks to me like all it's trying to do is just generate some more energy. It needs time. Monthly chart's already gone to a peak D if there's no new high this month. And all it's doing is just testing the resistance of the 200-period exponential moving average. And you can normally expect that takes a good few weeks to unfold in a monthly chart unless it spirals through, which it hasn't done. If you look at IBM is trading... IBM comes out with news after the bell. It's trading at 194.22. I shouldn't say I've given up, but I don't make a big deal about trying to trade options or trading it, anything that has an announcement after the bell. Why? There are just too many variables. You could be 100% correct, but the market responds in a completely different way. I just think for a 30-second gamble from 4 o'clock until the news comes out, I just think it's a waste of money unless you have a specific plan and you can implement that plan objectively. Triple M is breaking out at all-time highs just recently, and UTX, my pilot.
Recently, Basil CHapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil CHapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there, whether it be our health, career, or our finances. Some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Right in this final segment, just briefly, I'm going to show you the S&P chart that I was asked about. If I would just finish up the notation, there it is. We made a peak. F, pulled back very sharply at 1684 point. I think it was 48 or something like that. 51. Pulled back under the line. EMA went above it. Just squeaked to a new high that extended. That's sort of like D in the daily chart. Haven't got a D yet in the Dow. And that says you needed some time here because the stochastic's way down at 52%. The MACD is negative, but it's holding in price, and price is the determinant of trend, not the technical indicators. They're only confirming. So that's what I want to say. Now I'm going to go to Lou in Nashua, New Hampshire. Hi, Lou. How are you?
Fine, thank you. Fine, thank you. Yes.
Good.
Could you look at Nugget?
Okay, so this is the 300% direction daily gold miners. I think it's a trust fund. Yeah, it's a trust. Well, what's important about this is my 120 minutes just made a peak D. If there's no new high bar above 6.78. Wow, it hit 6.78 this morning. Trading at $5.98. Pulling back. MACD is still okay. Stochastic's pulling back to 81%. So that's also holding quite well. What's really important about it is that the lift-off that we've seen is used so much in the way of the stochastic in the daily. MACD's expanded, and yet the price is just I keep saying this, and it sounds like a broken record. The price is really not performing with the technicals. It's almost as if how I used to look at the dollar, and I said that the Fed, it was whack-a-mole. The Fed was keeping the dollar down, bang, 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 bang. Well, it almost looks like the same thing's happening. That nugget is in the gold, the GLD, and gold itself is in quicksand right now. I see the torque, I see the build-up, I see everything. I don't see the upside price momentum. So you've been long, right?
Right.
Okay. Are you still long? Have you taken any profits?
No, I just got in it.
Okay. All right. If you just got in, then this is what I'm going to look at. In the 120-minute chart, it says it's a peak D. I haven't yet got indications to say that there should be a very sharp pullback. Okay, let me just do this real quickly. I don't want to run out of time, and I just know that Larry's going to be doing this in even greater detail with all the other currencies. So if you can put the whole package together, if you can keep your eye on the dollar index or the dollar, the futures, but the dollar index right now is 82.86. It's up 36. I'm usually a little bit behind 82.99 is the price, 82.99. I'm a little behind, so it's at 82.99. If the dollar index tonight, overnight, and into tomorrow starts to climb above 83.20, I am quite sure that gold will be pulling back, and gold will be pulling back underneath the 9 EMA and will probably pull back to about 12. It's at 12.79 right now. Probably it will pull back to about 12.73 or maybe a little lower. And if it was the GLD, you want to look at the GDX. The GDX is really the instrument. The GDX has made leg B. It's still in leg B. 24.49 is the support that it must hold. If the GDX starts to break 24.30 and starts to close underneath it, I would say be careful, because the NUGT nugget, the 300 times bull, is going to be, it'll pull back proportionately, but it's a big percentage thing. Now, if you're looking more on a 2-week basis, I would say if you can keep some part of this as a core position, and then what you want is if it starts to go as if it's going to make leg D, and that, I have to tell you, the 9-period moving average in the weekly chart of the nugget at 8.03, that is really a target. It's got to get there. So, Lou, I'm going to suggest you can keep this core position, but I would watch 5.75 to 5.70. That's support that should hold. But I still think it's not going to pull back much more than a little bit in time, because the dollar still looks like it's got some weakness to it. And then you want to see 6.15 on your nugget. So on your trade, you can keep it as a small position, but don't add to it until it shows strength.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.